Well, as we get into our daytime trading session here and try and let the markets establish where they want to go, I want to remind you that USDA did have an overnight sale to announce this morning, and it was a sale of soybeans. The soybeans were destined for China once again. It was an amount of 132,000 tons of soybeans, and all of it was for the new crop, 2020 and 2021 marketing year delivery. So just wanted to point that out. A little bit of positive news here, at least to help support the soybean trade this morning. We have Chris Swift on the line. He's with Swift Trading Incorporated based out of Nashville, and we're going to take a look at our market action here, Chris. We'll start with the corn market, which has been under a little bit of pressure this morning, and that's carryover from the overnight trade. Then they added to it this morning on the open. September corn down 5.5 cents at 327.5. December down 5 3/4 at 334. Why the pressure in the corn? Is this all weather related or what?
Well, I think it's good weather more than anything. I saw some of the crops up in West Tennessee and southern Kentucky this weekend, tasseling, all of them very dark green, look just great. And we know that we've even had a couple of really big sales last week from China, and that still didn't move the corn market. So it looks like it's just a great big crop, and we still don't have that significant demand pull that we always have from the ethanol companies.
What have you heard in the way of farmers' sales activity for corn here in the last week or two?
Not much of anything. I don't think they even made a lot when the market rallied up, and then, of course, it pretty much went down 2 days of all of the movement down that we've had in the last 2 weeks. 90% of it was just done in those 2 days. So I'm not real sure that the farmer has had a chance to look out into the future and say, these are the long-term fundamentals, and this is how I'm going to market my inventory. So we just had an aberration in the market, and I don't think they've really done much of anything yet.
So you think there's quite a bit just parked out there yet?
Oh, I think so. Yeah, I don't think we saw very much old corn move when we got that rally up. We did notice 1 week, maybe 3 weeks ago, where the rail traffic had increased significantly for grains, but that just seemed to be that 1 week.
All right, let's look at our soybean trade with our quotes provided by bar chart here. And soybeans are still higher. August, 3 3/4 higher. We're at 901 3/4, so it has cleared $9. September up 3.5. November 2 3/4 higher at 897 3/4. It got within 1 tick of $9 and then backed away from it a little bit. Is that psychologically important to hit $9 or not?
I think it is. A lot of people will use that basis. A lot of places will have 20 under, 30 under basis. So that $9 new handle makes all the bases look just a little bit better.
All right, so you can tell that it has been a bit of a struggle, a very choppy market here recently. Looking at our wheat trade here in Chicago, September wheat with our quotes provided by bar chart, we have September now trading 13 lower. My goodness, they're piling on here. 521 3/4 is the last trade. And in the Kansas City hard red market, we are down 11 1/4. We're now at 437.5. We had a high last night of 450.5, so we've come back off of that by 13 cents. Minneapolis wheat on the spring wheat trade down 4 at 508 3/4. Why the pressure on the wheat, Chris?
I'm not real sure. You know, wheat had rallied about 90 cents off of its contract low back in the very 1st of July, so maybe it's just profit taking from the significance of the move. But, I mean, that's a pretty good size move, almost $1 in the wheat market for literally no reason.
Absolutely. Okay, we'll come back in a moment, and can't wait to get your thoughts on what's going on in livestock trade, choppy market in cattle for the last few days. We'll see what they're doing when we come back. October sugar down 20 points as we speak right now. I'm Marlin Bohling with you, and we have Chris Swift with us, and we're going to get his thoughts on our livestock trade here today. We'll turn our attention over to our live cattle futures. On the big board in Chicago, pressure increasing on the live cattle, and it's increasing on the nearby contracts here, Chris. August down $1.75 now at 101.52. Only 1 tick off of our low of the day. We had been as high as 103.40. October down $1.47 now at 105.40. That would be about $1.42 off our earlier high this morning. Checking out our feeder cattle market at the present time, August now down $2.10 at 140.60 per hundredweight. And you have September down $1.62 at 141.70. Lots of pressure, triple-digit losses all across the board on the feeders, and the least loss you have is $1.65 on that September contract. On the lean hog trade today, we now have August down $1.20 at 51.60, but it's not all negative. We have the far out deferreds just a touch higher, and I mean just a touch. February only one tick higher now at 60.40. April one tick higher at 66.45. So let's go back to this cattle market here. It's just starting to do a swan dive in the last 20 minutes or so here. Chris, have you heard why?
Not necessarily a specific why, but we know that last week and the week prior to, we had pushed the futures markets up quite a bit, and we had created some significant negative basis where the futures market's trading significantly higher than the cash market. We knew that there had been some farmer feeders out there looking for some cattle to feed their corn through. And then towards the end of the week, we saw some of the big major sales come to a close. A lot of those people probably put pencil to paper this weekend and saw that what they paid for a lot of those cattle probably wouldn't pencil out on the cash market. So the futures market is where they needed to go to. So we know that we have had elevated sales last week. So I believe that what you're seeing is some elevated hedging coming in this morning.
Now, what about on the hog side? Were they closed out last week under pressure? What do you think the market is trying to tell us today when they have this, what is apparent, bear spreading hitting the trade with the nearby is actually a little bit weaker, but the deferred's a little firmer?
It seems hard to get hogs up and out of here. We know that pork is a large food service product, and we're still depleted in our number of food service outlets out there to market that pork through. And their index has not moved much. We're still at 47.55 on the index, so all of the futures contracts holds a 3 to 8 premium against that index right now. So there's really nowhere for it to go just yet.
The crude oil market right now down 17 cents at 40.42 on the August futures on West Texas crude. All right, thank you, Chris, for talking with us. Chris Swift of Swift Trading Incorporated, based in Nashville. Christina?
Yep, he used to come into town, but it's a good thing we still get to talk to him on the phone. Thank you, Marlin. Appreciate that very much. And thank you, Chris Swift.